Hello everyone, welcome to Fearfully Greedy. In today's episode, I will go over the recent earnings updates and recent happenings on the companies on the portfolio. Very quickly, these and all my videos are not to be considered financial advice. Please consult a professional or do your own research before investing. I also may hold positions on all the discussed stocks, which I actually do in this one, so take that into consideration with my bias and I don't know, anything else you could consider. First thing is IRL International. What we have had is the first time the stock has fallen 50 or over 50% in the portfolio. From the break-even price, it's around 50%. From the first buy, it's even more, right? So quite a nice fall that I've been experiencing here. So what they did is they did a trading update, so it felt like over 20 something percent on the last week, because they did a trading update where they said that the revenues would go down, that the profit would go down. So we'll go over that, right? So on the results that they expect, they said $54 million in revenues that would go down to 2018 levels, and then profitability around 7 million, right? So it's half of the lowest year we have had and more than half from the first year that it was public. So not great news, right? They lost the Mozambique camp. Well, they have war there, right? So it's not that they lost it, but it's delayed. They're trying to repurpose the resources there. They have also had a bit of trouble of starting new projects with the COVID situation. A lot of the commercial segment is not working out. We'll see that later. Also, another thing that they said is that the order book, which I think it's the key indicator for this business to see how it's doing, it has gone the lowest since IPO, right? So it sits on the 31st of December at $100 million, right? So that's the project that they have signed as of now. So this is like a big bucket of cold water. It comes from a few big cancels in the order book. Usually they put in the order book, but they think it's 100% that it will happen. But as you see, it's not 100%, right? So another bad news that we see here, right? Then they also say that the financial position has worsened a bit, right? So we have numbers from the 30th of June 2021, where we had 10.1 million in cash on hand. Then the debt kind of would be 6.5 million, so net cash 3.6 million, which is something I always liked about this company, no net debt, right? On the 31st of December, we have only 9 million on cash on hand, but over 10 million in debt, right? So that gives us a net debt position of 1 million, right? So that's what they tell us here, because they increased the debt by 4 million, which makes 10 and a half, more or less. That's what I expect. So it's worsening also the financial position of the business. Do I think it breaks the company? I think not. I think they have 1 million in debt for a company that is doing at least 50 million in revenues, usually 20 to 30% gross margin. I think they're okay, but we have a worse situation than when we bought, right? They also say that most of these cancels in order book and everything, it comes from the commercial sector, right? Usually they have separated from humanitarian agencies, which it was their main segment, and they were pivoting to government and commercial. I don't know if why they grouped them so much, because maybe it told a clear history, a clear story. But probably a three segment would make more sense, because government and commercial, it's like completely different. But okay, so what is happening is they want to focus more in government, so this one, and then humanitarian agencies, which is their backbone or their origin, right? And ditch, at least for the short term, the commercial, because they see that it's hard for these companies to, I don't know, in the current environment, to really start the projects, really go for it, and they are like pulling back of some of these projects, right? So they need some stability. Do I think this breaks the thesis. No, I think the long-term outlook looks great. I think in 10 years we are not talking about this, which is a question I like to do. So, not great news, but not company breaking news. We need to assess on the next report and the final full year report, see what they actually say, because we have some information here from the thesis, but from the trading update, but not that much more, right? What I'd like to see is in near term, I'd like to see order book up, of course. I would like the debt to stay constant or repaid and have no debt, as I always liked. And then the facility management segment, which is the services segment, I want that one to keep going up and with longer contracts. We didn't have a breakdown of the segments in this trading update, so I don't know how they are doing, but this seems to be the more resilient segment they have. It's also the one that has longer contracts, is the one that is recurring, so I would like to see that coming up, like keep growing. And the other ones, I care for them. I think it's important. I think it's where they specialize also, but it's lower margin. It's one and done, right? So I would like the facility management to keep going up. Then let's go to Shinoken. Shinoken, in my opinion, had great results, right? So we were having a bit of maybe some bad news on the last reports and the last news, but they showed some growth. They showed stable profitability. So we are over the 96 billion GPI in revenues. Profit stays constant. We can check a bit more the segments. So these two are the ones that they make a sell. They build the department, the building, the condominium, and they are kind of done, right? So the margin they get there is what they get, right? But then there are the services, which is flat management, rent management, the monthly payment for the people living there, right? Then the energy one, so they have gas and also electricity at this point. Then the life care, it's like one-off, but I think it's kind of more recurring. Also, all of the second ones I said it's higher margin. So if we see here, we see that the real estate sales is pretty constant, a bit more profitable, which I like to see also. Then we have the real estate services, which is the one growing the most. Maybe the other is growing more, but we come from a very low base. And it's the most profitable one also, right? We see 21% of revenues, but much higher margin, much higher share of the margin. Then construction, very low margin business, but we need to have it, right? Then the energy one, as we see, it's 3% of sales, but 6% of the operating income, right? So high margin segment. We see growth almost everywhere, minus the real estate sales, right? Life care, I think it's an important one. We do a great service. It's a bit lower margin than the other service ones. And then overseas, things seem to be taking some wins. We start seeing some good profitability. So I think great developments in all segments, right? We could go much deeper in each one of them. There's a lot of... It's a small company, but they do a lot of things. Also, a thing that I wanted to point out is that it's very important in these companies that are not in our home country or in the United States, where maybe standards are not higher, but we know the accounting a bit better, and they usually don't make a full report in English or full report in other languages. They only do the one in Japanese in this example, and then they make a presentation in English, right? So I think it's recommended to go to the filings, the official filings, and translating those and checking the numbers by yourself, right? I did, it looks the same. Also, you get some commentary because we don't do like a live call with them, so it's hard to see the management talk because they will do it in Japanese and I don't speak Japanese. So it's important to check the numbers by yourself in the official documents, right? Then we saw an increase in debt, so the adequacy ratio fell a bit, but we also saw an increase in assets, an increase in business. So it makes sense, right? Only thing I want to take out from here, so we had this 7 billion increase in kind of debt and liabilities up to 53 billion million yen. We do almost 100 billion in revenues. We do close to 9,000 billion in operating income. I don't think this is a huge debt for them, especially for a real estate kind of business. But I wouldn't like to see this balloon as much in the next quarter, so something to take a look at. Then one step that they thought to increase their growth is getting a REIT. A REIT will just diversify their kind of client base. They have always gone to office workers that they wanted to invest and start doing investing in real estate. So they would make a loan for them, they would get an apartment and then get the people to live there, so pay that rent to the office worker, right? But that kind of limit their growth and their client base, right? So with the REIT, they could expand that, get a bigger pool of capital for real estate. But the thing is, they got accepted to have this REIT trading in the Tokyo Stock Exchange, but they have pulled out because they saw that the market sentiment wasn't so good. So they said, let's do it in a few months. So maybe we will get more funding and have a better release into the market, right? So I like that. I like people when they see things not working, pulling back a bit. This shows it very clearly, right? So I like this presentation because it shows a bit how really the business works. We have the flow business, right, which is construction, real estate sales, brokerage, those kind of things that you do once. And with that, they have always had the office worker, getting them to be their client. But now they will have the REIT, which, as you see, they plan mid-long term to have 100 billion GPI asset volume, right? This will give them this also increase volume, increase scale, and be able to keep growing this way. So I always like about Shinoken that they keep spawning things around, right? And from this, it's very important to keep doing the flow business, because then we have the recurring business, right? I think it's better shown here, right? So we have the apartment sales, the condominium sales, and now they want to have the REIT, which is the next step. There's also some brokerage things. The construction, it just goes online with, well, if you sell something, it's because you made it, right? Very low margin, but it's important to have it and be able to control the quality, the delivery dates, just control service. We don't need this for the margin, just for the service. Internationally, they are trying to mimic the same model, which is do all this, the strong blue ones, and then we'll get the recurring business, which is everything else, all the service business, all the gas and electricity bills and sourcing, elderly care, supporting people with disabilities, all these that are recurring business and higher quality business. So that's kind of the model of Shinoken, and I really like it. I think it's very smart. If they didn't have the recurring business, this is just another real estate developer, right? So, and I don't think it is. So, very interesting. We also see that as we grow more things, so we have this one, management of the rooms. Then we have the power and retail and gas contracts. Then we have the guarantees of rent, and then we have the gas contracts, and then we have the management of the rooms, and then we'll have something else. They just won't stop spawning things. So that growing the services that they do improves their scale a lot, right? So that's the main idea with this. And I think we can have a lot of compounding here as this keeps going. We're not just stuck on making buildings and selling those. We get future revenues and they are the ace for 100 years, right? For the same client, just keep getting services for them during their lifetime. That's their idea. They gave some guidance, which is over 14% in sales, close to 10 billion GPI in operating income. Keep in mind, this is a company trading at 35 billion market cap. There's some debt, of course. So, from the debt, the full debt they have like 50 billion in debt, but they have some assets. So I would say maybe close to 50 billion enterprise value. This is pretty cheap, like 5 times, maybe 7 times if you want, right? Something like that. So I think if they meet this guidance, this forecast, I will be very happy, right? So what are we looking for? Number of cases grow. That is in security, rent guarantees, like contracts in the gas and electricity, management fees, all that. We want to see cases grow as much as possible. I will keep them accounted to their guidance. I want them to meet that one. It's a good one. It shows that they believe the market is strong, that there are like these inflationary tailwinds which will make investors want to go further into those. So I think I would like them to see meet guidance, and then I want no sacrifice on margin. So the margin they make in each segment, I want to see them stay profitable as they have been, and no debt growth. So I wanted the debt to stabilize and just follow revenues, right? So if revenues grow 10%, I understand debt growing 10%, but not more than that, okay? Next up, we have Warrior. What is happening is they are on a strike, so they are producing slightly less, as you see, like 37% less. But what we have is a very good market. So with the Australian ban call in China and some other happenings in the world, shortage of all resources, like all commodities. So we have a very high price, like $300 average net selling price for the quarter, for the fourth quarter, comparative to $100 that we had a year ago, right? So that makes revenues like double, even if we had a much lower production, which gives us a very big number in profitability, right? It's better to check like the yearly numbers, see how we did the entire year. Very important to see the cash cost of sales. It went up a bit. Keep in mind they have a variable cost structure, so if the price of coal is higher, they will pay more to everyone, being royalties, and also to the employees and other third parties. All stakeholders get more as coal goes up, and there's a cap when it goes down, right? Around $90 per metric ton, right? So we had 450 million in EBITDA. As you know, I don't love EBITDA, but in this kind of business, kind of makes sense to see kind of cash flow. But I'd say between this and this, that's where the number is. Not the most significant numbers. What we should check is in the 10K. These are the key numbers to assess Warrior, right? First, how much we sold, right? As you see, in 2019 we didn't have any strike, so that's kind of the max production they can have. In 2020 we had some months of strike, and then in 2021 we had a full on strike, right? So that's what we sold. So we want to see that we produce close to what we sell, right? As you see here. Sorry, the difference here is mostly that in 2020 we had a pandemic. So we produce kind of the same, kind of a full production amount, but we didn't sell as much, right? But then in 2021, there's a good market, but we have an ongoing strike. Then we want to see that we are selling it at a good price. They follow the Platts Low Vol Australian Coal Index, and they tend to be on 100% gross price realization to that index, right? So we want to see a good high number that we're following one of the highest coal prices in the world, because our coal is of very high quality, as we have discussed in previous theses. And then what we want to see is that the cash cost of getting that coal out of the ground is not high, right? So we see it's going down. In a sense, we had a bit higher price, and the coal price has gone down from 2 years ago when we had normal situation. So that's kind of the 4 metrics that we want to check in Warrior every quarter, see if they are doing a good thing. And then it goes down to macro. They cannot control pricing that much, right? So as I've commented, since the first quarter of 2020, we have had the pandemic, which has impacted a bit the market, with some benefits on the last half. On the last quarters, we're seeing maybe a better market than we should in a normal situation, and on previous quarters we received like a lower market. Things were a bit slow and weak, right? And then we have had a strike from the workers because the contract expired and they wanted better conditions, which it's hard to comment on. I hope they get a deal soon that benefits everyone. More than that, I cannot say, right? We should also know that we are getting very good prices at the moment. The market is very frothy, so we are over $400 per metric ton, right? So if we could keep that up forever, right, this business would have higher margin than a software company, right? So that's pretty ridiculous. So we need to keep that in check. Do I think these prices are sustainable long term? Probably not for 100, but I don't think that will go down to 100, right? For the medium term, right? I think between 150 and 200 should be where we should sit, right? Why I think that's, I don't know, not to be expected, but it's a reasonable guess, is that the met coal production in the world is pretty constant, like up to 2025. From the projects that we should have coming up, the production is not growing a lot, right? So we have a capped kind of supply and an uncapped kind of request for that product, right? So I already covered this in my met coal video, but I think met coal is, if 100% met coal play has merit, I think it will deliver good returns, right? If not, I wouldn't be invested. They also gave guidance, kind of. So if the strike keeps going, 5.5 coal production, like a million short tons, and if things, I don't know, pick up, if we get a deal with the UMWA, maybe we can go to 6.5, even over 7, I think. If the deal comes soon enough, well, it's already March, so maybe 6.5 is if it goes right? As always, if the prices stay as they are, it will be over close to 100, right? Because from the variable pricing they have. If things sit down more to the $150 mark or 120 or so, it will go down to the $90 kind of cost, right? For the net, the other things is as should be expected. And there's another thing for Warrior, which is the growth opportunity that we have, which is Blue Creek. Blue Creek is another mine that they could start exploring, which would increase their production like by 50%. So without the strike, we would have around 7 million metric tons of met coal production, maybe maximum 7.5. If we add Blue Creek, first it can exceed, so it can bring our prices following the Platts index even higher than the Platts index. So that would be crazy, like very, very, very profitable, great opportunity. And we would be producing around 10 million metric tons. That's my guess, more or less, when the mine is fully developed. If we follow the index, the prices they would have, okay, 300 and 400 are a bit ridiculous. But as you see, for example, at 115, this would be break even without the strike. We lose a bit of money with the strike, but with Blue Creek we still make a lot of money, right? Then we go to 160 and the profits just kind of become ridiculous. Like if we would see to 400 for some years, keep in mind this company is trading maybe close to 2 billion now, but if the market would stay as it is, it's warranted and much more about that. First, we need to get things ready inside the company, right? Because the market can be great, but we need to get things ready. Another thing I extracted from the 10K is that, so these are net operating losses that they have, 722 million on federal and 992 on state. So that's what I think management thinks they could make in they said between 6 and 8 years, right? So between 6 and 8 years. So that gives us around 100 million profit, net profit per year. That's in line, like that's what I think they can expect, right? And I think it's a conservative assessment. So as you see, the higher the index, if we get things ready, this company can become very profitable. Will it? I don't know. At least it's one of the lowest cost producers, one of the highest quality coals. It's the highest quality coal in the US, so it has a lot of things going for it. This is a presentation that they did 2019, at the end of 2019, with Blue Creek, right? Blue Creek gives them kind of a bit of a different coal, also of high quality, that if they could mix with their current offering, this one would have high ball A. That will kind of increase their portfolio of coals that they can sell, also increasing the margin, because if they can mix both together, it makes like steel producers have much more efficiency, and it also serves more people, right? That's the idea. That's the performance they did. So at 180 metric tons with Blue Creek, so that would be for Blue Creek. At 180 they made 470 EBITDA. We got close to $1 billion, right? At 180, so not too bad, not too bad. Free cash flow a bit lower, right? Not full cash conversion there. So what I like to see in near term, because they are just guesses, I would like to see an agreement with the union. I would also them to stay diligent on costs as they have been. One thing we can say about Warrior is that they have stayed consistent on costs, no quarter that it spiked up. And then I want to see a resume of Blue Creek project instead of a raise of dividend, which they already have announced. But I would much rather prefer them starting the Blue Creek project. I don't know, as soon as possible, I'd say. But these are the three things I would like to see for Warrior. Next up, we have Inter Rao Lietuva, who had a great year by revenues, so a bit over double from last year. But the margin shrinked a bit, that's the gross margin. And if you see the net profit margin, it shrink even more, right? What happened here is that they had a repricing of some of their hedging instruments, right? So like a 16.1 million loss in investing activities, right? They tend to hedge the energy pricing so they can have something more recurrent and more controlled. That's very common practice. But as you see, like the margin went down by quite a bit, right? I think this will normalize next year, but well, they still had a great year. We'll get a net profit of 14 million, which will probably go straight to the dividend, which we should get paid in like a month's time, more or less, which is a good dividend. I think so. For the prices, I think we're on these higher prices for a while. If you're in Europe, we're paying ridiculous amount for energy at the moment, especially in the current global or world situation. So I think it will be some good quarters for them. They come from actually Inter Rao, the original company, was from there, but it's a subsidiary at this point. They don't own much of it like any of it anymore, and it's owned by some subsidiary of that subsidiary, and then by some Lithuanian financial company. So we have no links there. Of course, the energy comes from where it comes. Okay, one thing I also like to point out for this business, if you saw 300 million in revenues with 39 people working there. I love that. The margin is small, of course, but bigger than a supermarket, so it's a great company. I really love it. So what I want to see near term for them is them staying diligent on costs. They have always been, but I want them to continue doing that and just continue the great work. I'm very happy about Inter Rao Lietuva, how they are executing, and how everything is working out. As of today, 2nd of March, the portfolio sits like this: 26,600 euros, a 2,000 euro gain. We have had our ups and downs. Warrior is holding the portfolio. Most of the other positions are losing some money, but I will continue to assess how the business develops, and eventually, I think, well, that's my opinion, price will follow, right? And I think what's really happening is what I talked about in the video, and not that much the price movements. Still, I'm happy for the stocks that I like to keep following, so I can keep buying at better prices. So I just bought 190 shares of Naked Wines, and I added with the addition of the 500 euros of March, right? So at the moment we have almost no cash, and we're very well set. Well, also, if you like my content, consider liking and subscribing. It helps a lot to keep me motivated, and keep sharing what I learn. Okay, well, everyone, thank you for watching. Be safe, take care.